What's going on, everyone? This is Jordan with Conquer Trading and Investing. I hope you all doing well this morning as we get ready here for today's live stream. Another morning, another great morning, and another live stream here on the public side. Wanted to check in with you and make sure that everyone keeps their pulse on the market. We're going to be looking today at Bitcoin. We're going to be looking at the US dollar through the lens of the DXY. We'll check in what's going on with the Euro US dollar as well. Take a look at Ethereum, and we're going to take a look at the NASDAQ as well. More importantly, we're going to take a look at what is currently being priced in by the markets, what the markets are discerning. This morning, we had third quarter GDP released. It came in 2.6%, and it looks quite attractive. Peter, great morning over there, over in Europe. Good morning, good afternoon, good evening, wherever you are. I'm so glad to be here with you. I wanted to jump on with you and make sure that we all have the awareness we need to stay on the right side across markets. Headline GDP for the USA came in quite attractive with a beat of 2.6%. Now, you can't really pull the wool over the eyes of the people for too long. Most people realize that really what you were seeing was a lot of LNG gas being sold to Europe and a lot of weapons being sold to Europe, making up for a large portion of that GDP print. Probably in the fourth quarter, we're going to see that come off, maybe even substantially, but the election will be over. It won't really matter anymore. They're trying to their best to make things look good going into election. We all know that. We saw an alarming drawdown on the consumer spending, core durable goods tumbling. The economy is definitely not running hot, but as Powell has said over and over since this tightening cycle began, he believes the economy is strong enough to withstand the tightening. There probably will not be any rate cuts anytime soon. They're still tightening. And by the way, we're looking at the markets pricing in so far this morning, a 90% chance that next week, FOMC on Wednesday is going to go ahead and have a 75 basis point rate hike. After that, in December, right now, the markets are pricing in about a 60% chance of a 50 basis point rate hike. And that in there would be the turn. The turn is a lesser degree of rate hikes working towards that pause. When will the pause be? Will it be into February? Will that be the last rate hike they get in? That's what the expectations are right now, or thereabouts. And then when they move to a pause, the biggest tell is going to be how the equity markets react. Remember, inflation is still going to be elevated. There is no reason for stocks to begin running. I think we're a long ways away from any type of bull market in the equity markets. Nevertheless, if they're able to go sideways, when we talk about sideways, I mean sweeping up and sideways. That's quite bullish. The concern would be that if they actually do not put in any type of stabilization into a pivot is to the pause, and we see stocks, equity markets continuing to sell off, that would be worrisome. That would mean that companies, consumers, individuals are really looking forward to a 2023 slowdown. Everyone is batting down the hatches. It becomes a self-fulfilling prophecy. And then that would mean that likely we're going to start seeing rate cuts happen a lot sooner. People get very confused about taking people at their word. When I talk about people, I'm talking about the Fed chairman, Jerome Powell, whoever is chairman at whatever time. It's a fine line between believing what they're saying. Remember, inflation is transitory. Remember, 75 basis point hikes will not become a habit. They will not become common. All these things obviously are not true. When they tell you that they don't plan on cutting in 2023, the odds of that happening are extraordinarily small. Powell did say, though, if they're able to do that, the longer they're able to keep rates at an elevated level, the greater chances of a hard landing. That means the greater chance of a recession, and a significant recession. We'll see. Remember, I think that for me, the greatest incentive of the central banksters is to extend the cycle as far as possible. A lot of people get confused on the onset of the tightening cycle, thinking that because they're tightening, they want things to break. Remember, when things break, their only solution is to go back in, expand that balance sheet, and reinflate things. That's going to cause, obviously, these inflationary pressures to grow even more pronounced. I don't think they want that. I think what they want to do is to delay as much time as possible between this current cycle and the next one beginning. We'll see if that happens. If there are any rate cuts sooner than later, that is going to be bad news bears. Watch out for it. And we'll see. We're still data dependent. We're a little bit less data dependent, though, going forward into November. CPI is coming out, let me see, on November the 10th. I think that going forward, CPI is going to play a lesser role in our view of what is most important here. And I think that we're going to see the job market become a greater signal, because once we start seeing the job market come off, that is going to be signaling that we are getting closer to D-Day, or I should say R-Day, into that recession triggers. Market's going to be focusing on that. Everyone knows inflation's hot. Everyone knows inflation's sticky. I don't think that is so much a problem. Now, the one problem going forward could be, though, NPS. If we do see at any point in time, we start seeing oil. Let's take a look and start off with oil today. If we start seeing oil rising, that could be of cause of great concern. Let me jump over here, and a couple of things of note. Let me start on the 8 hour. I'll come back down to the 2 hours. We look at the DXY next. But we had over here this, what looked like to be a really good entry on oil, breaking out of the trend line. I was away traveling on this Monday. I was not able to take this trade. The next potential entry on this trade was on the breakout over here. You had the breakout, a retest, and a resumption. A lot of you took this trade. I stood by. I did not take it. I stood on the sidelines. I really wanted to get into a crude trade at this particular point in time, but I felt like I missed the correct entry and I stood aside. And then that went up nicely, right? So people had the opportunity to manage that trade well, either take some small profit and or move their stop loss to break even, which they would have gotten out of that market. Into the first resistance, stop loss is at least moved to break even if you're not taking 10, 15% off. Thanks, JBS 314. Blessings to you as well. Everyone, just be you. Be you. The world needs you. And then we have over here then we had this breakdown, this retest, and a resumption down. And you can see we came into this area of support. And this could have been a good place to establish a position. But for me, I was like, you know what? I'm going to give it more time. I'm going to give this much more time and see that if it becomes a lot clearer. We still are in no man's land. And I suppose that we see right over here, you can see these two touches. Again, over here, touches. And where we just came into resistance. See how we got overhead resistance here, over here. I think that, it's going to be a little bit more of a signal getting above the red line that perhaps price could run. And until then, let's see what it does. I would prefer picking up an entry that was a lot nicer. And I'm not in a hurry to pick it up. I just want to see what kind of develops over here. Nevertheless, just pointing out that traders picking up an entry over here off that retest into where that yellow entry was, and then resuming up over here. I mean, it's a play, and it would have been a good one. Just not attractive for myself. Moving over, looking at the DXY with you all. Yesterday, we looked at and added this red line over here. This red line was a clone trend line. The prime trend line is highlighted over here in bold in this whitish blue color. Cloned that trend line over here, made it red. And the reason we added it in over here was because yesterday, let me come down to the 2 hour time frame. You see yesterday price kicked down and then came back up over here. That's what we were looking at as resistance. We drew this line in to say that as long as the dollar is below this line, it's still under pressure. When we talk about under pressure, you can see over here, dollar, where we left it off together. I said, oh, well, we're kind of in no man's land. And I don't know what happens next. I'm not looking for the dollar to rise out of here or the dollar to fall out of here. I'm just going to wait and see what the market does and wait for further signal. Market wound up breaking down and is testing this area of support. The yellow line we have driven over here is a one-touch trend line off of the clone prime trend line. If that breaks down over here, the dollar could be rolling over, right? Now, that rollover might be a little waterfall down, and it might go as far as maybe as 107, right? Towards this area right over here. And then it might be going sideways for a while. Don't forget, the markets are not always straight down or straight up. Sometimes they could be like, sideways. And sideways is not flat, like Bitcoin running at $19,000. Sideways is like that. So the dollar right now, or dollar bulls, have every reason to defend this area over here, this area of support. If they're going to hold, now is the time. A lot of people are very confident in their dollar wrecking ball position. But what I saw out there sentiment-wise over the last 48 hours were a lot of people who hold that particular view and are tied to their bias. They're overly defensive, or they're very defensive. They're not confident in dollars into support, something I was looking for. I'm waiting for a technical breakout over here, and I'm going to be buying add into my position. It's actually a lot of defensiveness, so that's notable to me. Market participants and sentiment is very important. For me as a technician, I see price coming below that green line of support, right? And then breaking down over here. It's in a very, very fragile position in this area over here. If it breaks down, all of a sudden, the trend, this trend that's been going on for quite a while, this upward sloping channel since the beginning of 2022, is in jeopardy. And it's in jeopardy fundamentally from an area where the Fed is beginning ready to change their policy. Now, the Fed is not pausing. The Fed is not pivoting, I should say, because they're not pausing. It would be a surprise. Now, some people out there are talking about a 100 basis point hike coming in next week. I doubt it. That's not what the market's pricing in. It doesn't make any sense to me. Look, stranger things have happened, but again, people were talking about that last month as well. That didn't happen. The Fed had a lot more cover to do that last month, and since, we've seen two central banks pivot. Now, the ECB just came in with a 75 basis point hike as expected, but we saw the Bank of Australia, we saw the Bank of Canada come in with lesser degrees of rate hikes. That is probably what the Fed is moving towards in December, probably, or right now the market at least is pricing in that 50 basis points. That's not a pivot, but it is a turn in policy. It's a beginning of a change in policy. Instead of rising rate hikes or level rate hikes, it's a lesser degree, and it probably is working towards the pause. We'll find out. If the dollar breaks back above this red line, though, however, it's made it back into a healthier position technically, and it is back into no man's land, and that's where we'll play it out, and we'll wait and watch. When would a time become, Jordan, could I remind you, the Fed is hiking rates next week. That is, from a rate differential perspective, that's healthy for the dollar. It's probably going to, I was going to say, but ECB, don't forget, is hiking in unison now. So, but the ECB just put in a 75 basis point hike. The reason I'm talking about the ECB is because the euro is weighted 57% into the DXY, so it matters. So I'm going to see, or right now look, if there's any place to line up any type of, this is too aggressive for me. It belongs there though. That would be, so getting back above the red line over here, a breakout over here. If you are a dollar bull, that's the time that you're having an impulse back towards the trend in place. This is the greater trend in place. It's massive. It's big. We have seen a series of lower highs. Not only have we seen lower highs, we saw, which usually happens at the end of a trend, we saw this big move up, right? And then it didn't go anywhere to try to draw some people in. But, I'm still going to go with mean reversion, and I'm still going to go with the dollar has a chance here to go ahead and recover while holding this area of support. I just am noticing, by the way, that those that are very bullish on the dollar are becoming very defensive. You should be confident in your analysis, confident in your thesis, not overly confident and not obnoxious, but you should be not defensive. If you're defensive, take a look at that and why. Let's take a look at the Euro US dollar, and we've had a couple of things going on. I mean, first of all, you have had the trend line break, which is a good sign of a reversal taking place. But going into that trend line break, you were putting into a pendant. You see that pendant over here with the lower highs and the higher lows, and price was coiling, and it broke out to the upside, right? And then what happened over here is that we had the first area of resistance marked over here with these touches, and price was able to get above that, but we had above that, we had further resistance, and price just in this area over here between resistance so far petered out and is now coming back in and retesting that area of resistance, right? So, look, it's fragile here. So, again, reverse that and think the DXY needs to get back above. Let me pull it up really quick just to show you. Needs to get back above this red line and break out of that bolder trend line break to be a little bit of positive flow into it. And the Euro US dollar on the reverse side, for it to break down over here, it has a break. It's coming in for a retest. If it breaks down and rolls over, the DXY is not so favorable here. It looks like potential trend change coming in. There's pretty strong support over here horizontally right there, and there's trend line support. The euro needs to fall below that. The euro needs to fall almost to 98 cents in order for that to be rolling over and for this breakout here, this reversal to be nullified. So, that's what's happening. And then you also have fundamentally, you have the U.S. Treasury market chatter that the U.S. Treasury market might actually be the one running QE. They might move towards Operation Twist. That is not really, that's obviously very bad for yields. And you don't want to get in the, don't fight the Fed. Don't fight the Treasury either. So listen, be cautious, be smart. Don't get, if things are changing, regardless of what you hear from people out there, don't forget, very few in real time are able to get these things right. A lot of people become very vocal once they understand the change. They're very good at echoing the narrative. They're very good at firming up, but it all sounds good and people are attracted to it because people like something that's easy to hold on to. But that's not what makes you a successful trader. It's not what makes you a successful investor. You got to live within the tension, and you got to be able in real time to be able to adapt. Very few could do it. All right, that's a rundown over there. Let's take a look at Bitcoin. Let's take a look at Bitcoin first from the log scale over here that we were tracking together. And the last that we took off over here, we were waiting for whether or not there was a breakout or breakdown. We had the aggressive lines over here in red for a breakdown, an aggressive line for the breakout, and then we had the confirmations, the outer lines above them. We had a breakout over here of the aggressive entry over here, and someone might on the close look to take that entry, right? Or that entry coming into resistance, that might have had to scare them off, especially after the big pop. After then, price came in for a retest and then resumed up. That over there is a very good entry over there, right around 19,600. And then from there, price broke out through the confirmation. This was saying that this breakout is indeed intact. That also very good entry, coming in closer to the whole number of 20,000, a little bit below it. But on the close over there, you have an entry as well. Since then, price has run up, right? And then you could see this line over here off of that resistance. That resistance comes back into this whole area, and price so far is retesting that, and there's a lot of space over here. So thus far is very, very healthy. It looks good. It looks very healthy. We still have the FOMC next week. It's definitely a wild card. And watch out, by the way, here's the biggest risk you could have over here when you have a descending, or I was going to say descending triangle. I was not viewing that as a descending triangle. We'll look at that in a minute. I was viewing this obviously as more of a pendant because I was viewing on the log scale over here the higher lows. Price was sloping up, and then you had the price slowing down. So I've been viewing this as a pendant, right? By the way, massively good job here together on this channel preventing people from getting caught into that fake breakdown on that CPI. The video was released that day, right? Price was about $50 from triggering any type of short. Beautiful, beautiful, beautiful work. I'm always a bit hard on myself where I get it wrong. So where we do a very good job, I want to go ahead and point that out as well. If you are watching this session today and you value being here, please go ahead, share the love, hit a little bit of that like button over here, blow it up if you feel like it, and make sure those that are watching today on the replay crew, go ahead and share a little bit of insight, a little bit of comment. The risk right now, always be looking at your risk. I mean, healthy position to be in, whether you took the trade over here on the confirmation of the breakout, or if you took a trade over here, whether it was on the initial breakout aggressive line or on the resumption off of it. Either which way, you're in a good place to be. Is it time to move your stop loss to break even? Yeah. Why wouldn't you? You had the breakout of the resistance over here. You had the breakout of the resistance over there. Why price could still come back down even towards entry over here or even into this trend line and then resume up. It's very easy to reestablish a position from a risk to reward standpoint in managing your trade. Makes a lot of sense right now to go ahead and tidy that up. The greater risk over here is that on the breakout of this pendant that you see price break out and then fail, come in, fail, break down below. That would be the entry probably for us to close below that red line. Still waiting for that. Hasn't happened yet. Remember that. That's been going on. When I talked about patience pays and the amount of people playing in this tight range, which makes no sense whatsoever, getting swung around, waiting for the trade to be clear and then stepping in. And it's not easy. This was not easy this day, but we were there together and we managed through it. This was not easy this day over here, but we were there together and managed through it, waiting with that patience of a predator. Stop being in a rush to lose money. Be patient, be secure, be confident, and do what you got to do to go ahead and stay on the right side. The concern would be a breakout liquidity grab up here right now, right? Exit liquidity. And then this rolling over very much could happen. It's still in play. We need still some further upside repairs over here before that's out of the picture. Be very, very alert. Do not get into a position right now. If you find yourself into a positive running position, do not get comfortable in it. Make sure right now you go ahead, you tidy that up, and you think about moving that stop loss at least to break even. If you took the trade over here, the aggressive one, you might want to go ahead and take even 50% off now if price were to come back towards that area, because it would be a little sign of weakness. It could happen, and then we could roll over. You could get back into the market at the right time. We'll play it out together. Let's look at that from a linear perspective as well right now. And we were watching, and again, a lot of people here, they saw a descending wedge. I think maybe they were using the close over here, ignoring the wick, and then just going horizontal like that. I was going from over here, right? And I was lining these up and then these touches. And this is a descending wedge, the way that I was viewing it. I mean, it's TA. It's all subjective. You could do whatever you want. Either which way, it's all just giving yourself levels to manage risk around. So it's not like a question of necessarily even being correct. Now, granted, some people are a lot better at it. The way that we try to teach it here is simplicity rules. Nevertheless, let's keep going. And I looked at this as a descending wedge, and we did a couple of things together. We added in these two lines above, and they were lighter lines because the important one over here is in bold. And we said that breaking out, we still got this first line over here to get through, right? And then we had that second line to get through. So let's go back and watch what happened since. And you could see that price on the breakout came back into that line we drew, and it found that broken resistance as support. It established support over here, and it came back up. And then after it came back up once, it used that line to establish support again. Yes, it wicked below, but it closed on a 2-hour basis back above it, came back in, and then again this morning is doing the same thing. So pretty neat to first of all go back and say, wow, maybe I thought Jordan was a little crazy that morning when he drew those two lines over there, especially what's he doing with a one-touch trend line. I was told you need 3 lines to establish a trend line. But then going back in real time and forward and seeing how that played out and why it was done, is pretty neat. I mean, that's the nuggets you learn each and every day. Now, the other thing I want to point out here is that neither one of these is right. This is a log view. Jordan, why are you viewing this on a log view? This is linear. The log actually gives you a better entry, 19,600, right? Whether you took it on the breakout of the aggressive breakout or you took it on the resumption, retest, resumption, right? And then over here you had, let's call it the whole number around 2,100, 2,100. On the linear, right, where are you taking the breakout? I mean, for me, if I was doing this on the linear, I was doing off of CTM 2.0, but I would have had over here this top tick over here. It's at 19,950. So it's the same as this breakout here on the linear, right? This one's a little bit higher, but right there, same. The aggressive one over here on the log wins, but I would have had that extended out. And on the break of this trend line, I would have been waiting just for the break out of that. That's how I would have given my entry over there. Just letting you know in case you are interested on how to trade breakouts and why. Now, if someone was waiting for the breakout and then they were looking for a retest and a resumption to get in, this is only now coming in for the retest. And the retest is coming into that outer line over here thus far, right? It's very healthy if it is able to go ahead and resume out over here, right? Nothing wrong with standing on the sidelines and waiting for a little bit of confirmation. Now, there's a difference between being like frozen or not being able to pull the trigger, but those might be issues for a trading psychologist. I don't know. That's not my thing. Ace, thanks for blowing it up. I appreciate that over there. That's absolutely, I love it too, for sure. Just be yourself. Just be you was the tweet this morning, and that's the truth. I'm here to enjoy my time. I gain great value from it, and I love to share it with all of you who find value in it. I'm not here to write exciting headlines or even include a thumbnail or anything like that. I'm here as an artist writing and sharing my craft. That's the way I view it. And then what do we got? You know, that's really it. It's a tight session, right? That's what we wanted to get done, or I wanted to get done with y'all today. I wanted to talk about the equity markets, actually. Let's look at them from two different angles. First, on the daily, I mean, still what? I mean, clear as day, no reason to be in the market. Now, the daily is fine. 4 hours, much better. 45-minute is much better. Let's take a look at really what's going on in the market. And I want to go ahead and see over in this area over here, right around 11,700. I have this area of resistance over here. Follow me over here where price at this point established support, right? And then resistance over here, support over there, wicks below. So it's kind of where price is right now. All this area is resistance above. Price is exactly where price came into. You can see it already here on the 45-minute where I was looking at it more on with a closer eye. You could see that area is that price right now is above the June low, right? So price being above the June low, that's kind of like the DXY. The DXY is vulnerable right now to a breakdown, but still in a position where it could hold on. Over here, you're looking at the NASDAQ very weak underneath this resistance, but at the same time, it's not as vulnerable as it was on the breakdown. Remember, sellers had the opportunity here on the break of the June low to really attack. There were no sellers. That's the problem. There were no new sellers left, right? Everyone or the professionals, maybe even retail now, are taking advantage of things through the options market. Now, prices since come up, recovered the June low, but is into resistance. And this thing could still roll over and take out those lows. Next week is indeed a pretty big event as you were looking at the FOMC coming in with a rate hike. Now, I'm not going to go ahead and put in a trend line break. I think it's too early. I'm wondering where the entry would be. Might be below the June low. Might be below the June low, but how are you trading that? Are you looking to take a position short at these levels? I don't know. I think the 45-minute provides much better opportunity for those that are looking to trade, and I would not be able to take a position, daily time frame position at this particular level over here. We're just way too far down. It's not from a risk reward. It doesn't make any sense. 45-minute over here is kind of, well, struggling, right? We could see the touches into resistance. We here put a lower high into that resistance. Where does this thing begin breaking down is really the question I'm trying to find out, as if we know for a breakout, we need to get back above that red line above that 11,700. So for a breakdown over here, I'm going to look over there at that line. Keep it simple, keep it smooth. That would really signify that we're having a breakdown that could take us back down towards the yearly low. That's when we're really vulnerable. Right now, I would view this more as neutral. There's no reason to be long if you're not into a position. There's no reason to be long even if you were into position. Right now, you should be waiting for an entry. And I don't see an entry developing yet to the sell side or to the buy side. We are right now in an area of resistance overhead and support below. Just a little bit of patience over there and wait for it to come. S and E W. You poor brother, don't be poor, be rich. Be rich in love, be rich in generosity. Why would you be poor? Be rich. It's all about attitude. If you consider yourself, if you label yourself poor, you're going to be poor in everything. You're going to be poor in the way that you view the world. Look at this comment. Wow, what's up with the live stream for the poor people again? It's very poor. It's poor in attitude. It's poor in generosity. S and E W. You have to change your world. You have to change your world today. It starts with what you think. It starts with what comes out of your mouth. You could do it. You could do it. Use this opportunity today to make a difference. Maybe you want to watch some Tony Robbins. I think some Tony Robbins or something like that might be very helpful for you. Look, if you want to be successful in the markets, it starts with yourself. The whole journey as a trader is a journey of the self, and you can't have one without the other. I welcome it. I really welcome it. I really do. You know, that's up to you. You get to choose what you want or you don't. CTM 2.0 is not. It's not even available. Like that stopped a month ago. I told people ahead of time. There's no no availability for that. It's closed off. You had the opportunity at another point, and but brother, be love, share love. You know, be love, share love. Come in here, and you know, be a change in the world. You know, and that could be a small comment, but that's what I'm just trying to share right over here. You know, it's true. The heart and mind are connected. It directly affects how you're going to, let's say, what you're going to achieve. There's no question about that. All right, everyone. Rokas, I have no idea. I have no idea. I'm so sorry. I don't know. You know, I showed you today, Rokas, the way that I view the market, and I think it's rich. I think the TA skill is simple and clean. It's all about risk and trade management, and it makes everything else that's complicated, it removes it from the equation. You don't need to go ahead. I mean, I have an understanding of the financial system and the markets and how they work, which is why I share what's going on with the macro. We do have a strong history here of why these macro experts struggle to be on the right side and at the right time. There's no question about that. It's not always easy, but we really do our best to stay on the right side. But I simplify things as much as possible. That's the edge in the markets. I don't need to anyway, that's what I want to impart on you. Anyway, everyone, I do want to go ahead and prepare over here for our CTM work session. So I'm going to say, with lots of love, thanks for being here today. If you did watch this on the replay, please go ahead and hit that like button on your way out. Specifically, if you're on a mobile, take that little bit of extra effort. It does help the channel. It helps other people come into this community. And also, by the way, there was one other thing that I wanted to say. If you haven't yet subscribed, make sure you subscribe to this channel. We'll be back for more. Everyone, have a beautiful day. Lots of love. And everyone, God bless.